Hello traders and welcome to another video review. Today is Tuesday, 1st of June 2021. So let's take a look at the Forex calendar because it looks like we are going to have a busy day today. The key data released overnight were mostly from Australia and China. We have plenty of data like PMI manufacturing, building approvals, company operating profits, current account, and the most important, interest rate decision by the Reserve Bank of Australia, including the monetary policy statement. The Reserve Bank of Australia decided to keep the interest rate unchanged at the level of 0.10%. So we will definitely take a look at the Australian dollar today. From China, we got the market final manufacturing PMI, which happens to be better than the last month, but was than expected 52 versus the 52.1 points. During the London session, we have important data to release. We got the retail sales and gross domestic product and purchasing managers index data from Switzerland. As you can see, the gross domestic product is supposed to be decline from 0.3% to minus 0.4% for the first quarter. And year to year, it should increase from minus 1.6% to minus 0.2%. So, bag of mixed data. We got the PMI manufacturing data from Spain, Italy, France, and of course Germany and the whole European Union. Moreover, we got the unemployment rate scheduled for release 5 to 9 from Germany. Market expects the unemployment rate to stay unchanged at the level of 6% in Germany. Of course, unemployment rate in the whole European Union is expected to stay at the level of 8.1%, unchanged as well. And the consumer price index scheduled for release 10 o'clock from the European Union is expected to increase from 1.6% to 1.9%, which is a slight, of course, inflationary pressure. During the New York session, we have a data from Canada. The gross domestic product, as you can see here, is expected to increase from 0.4% to 1%. And the quarterly annualized gross domestic product is supposed to decrease from 9.6% to 6.7%. Manufacturing PMI for the Canada is scheduled for this 2:30, and it's expected to increase from 57.2 to 58 points. And at the end of the day, a bunch of data from the US, of course. ISM Manufacturing data scheduled for this 3 o'clock. As you can see, we got this PMI, ISM Manufacturing and Composite and Services Day for all over the world. In the US, ISM Manufacturing is expected to increase from 60.7 to 61.2. We got the construction spending. We got the economic optimism, and at the end of the day, we got some speeches. Two speeches from the FOMC members, Randall Quarles and Larry Bryant, will give a speech, and at 4 o'clock p.m., Bank of England Deputy Governor Andrew Bailey will give a speech as well. So, pretty much busy day, plenty of data to be released and digested by the market participants. But let's take a look at Australian dollar due to the interest rate decision. And then, of course, we'll take a look at the euro dollar, and then we will take a look at the US dollar to the Canadian dollar. So please stay with me for this part of the analysis. So what do we have here? Well, the first thing we must notice on the Australian dollar to American dollar daily time frame chart is that the market recognize our short-term trend line. That's the first thing. Second thing, market recognize the breakout below this lower channel line, the blue one. And it looks like if this candle will close like this, we have the second rejection above the trend line. Then of course the bears are in control of the market, so they can push the markets lower towards 7,680 or even below. So please keep an eye on the Australian dollar to American dollar. It looks like this market is going to test some lower levels. If 7,680 pips is violated, then the next week technical support is 7,588 pips. Very clear picture for the Australian dollar. Let's take a look at the Canadian dollar. Canadian dollar, as you can see, tried to break above the 1.2143 technical resistance, local technical resistance, because the key technical resistance is still 1.2244, and it's being pointed out by this blue arrow. A week or so of the consolidation, range trading, basically on the Canadian dollar daily time frame chart, the support at 1.2, the round level of 1.2 is still being considered as the key technical support for this par. So please pay attention to the current developments, because if we just zoom out, we can see that there is nothing on the left side that could serve us as some sort of technical support. This one, as you can see, the one from 2017 is violated already. This one is violated already. So it will no longer be kind of useful for us in the longer term. We can even zoom in to see, yeah, there you go. This is the low, and this low had been violated. So maybe the zone between those three technical supports that are being right now tested, 1.2057, the first one, 1.20, the round number, and the lower number, 1.1970, might be around 150 pips. Very strong bounce zone, demand zone for the US dollar to the Canadian dollar. So the market will buy US dollar and sell the Canadian dollar, right? Because right now we are selling US dollar, buying Canadian dollar. Well, we don't know that yet. What we know is that for the whole 2020, we are still in the downtrend, and we are now penetrating lower levels of the this recent wave down, and we are of course testing long-term technical support, which is very important, because that would price behavior, that market behavior will definitely define the future the future outcome from this situation, which may be we either bounce hardly and dynamically up from this, let's say, zone, or we will break below it, and that means a further decline towards another larger time frame, long-term technical support, which is way below 1.19. Okay, so that's the current situation on the US dollar to the Canadian dollar. Please keep an eye what is going on here on the chart, on the daily time frame chart, whether we are going down to penetrate the technical support, or maybe we are trying again to break above 1.2143, the first technical resistance on the way up. This is the US dollar. Okay, euro to the US dollar, of course, the key pair for today. What is going on here? As you can see, the short-term trend line, the orange color, is still valid, is being recognized by the market participants, and despite the fact that the momentum is not that strong anymore while we are going up, the trend is still this local trend is still up. It's still kind of a strong, because it's still around 60 points on the RSI, so it's kind of a strong, not that strong as it was before, of course, but the trend line is being still recognized. We have a very nice pin bar candlestick here. The overbalance level is still 1.2111, so that's the let's say that's the overbalance level. 1.56, we need to move it a little bit lower. There you go, 1.21. This is the current overbalance level, 1.21. That's the biggest correction here, minus 1.56%. So the recent dip has ended at the level of 1.2133. So it's still 33 points above the overbalance. We have a bounce from this level, and of course right now we will be waiting for another test of the level of 1.2265, which is the high of the 25th of the May. And then of course if this level would be violated, the next target is 1.2352, which is, as you can see, the swing high from the first month of the 2021, from the January 6th of the 2021. So that level is still possible to hit for the euro to the US dollar, because ABC correction had been completed. However, this move up doesn't still look quite impulsive. It looks more like a zigzag. So please pay attention to the fact that we might be doing here another corrective wave, whether that will be the wave B or wave X, we will see in the future. The fact is that it doesn't look that much impulsive anymore. Any breakout below the overbalance at 1.21 is definitely a warning sign for all of the bulls that this up move has been completed. And right now we are going to test the key technical support 1.1993. But so far we are going up as far as I can say, toward the level of 1.2252, the highs from the January 2021. So that's my analysis of this three pairs for today. Thank you very much for watching, and I hope I see you guys tomorrow. Bye bye.